like that because it's the mind that needs to first of all be rebranded.
He said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff?
Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
A very good morning and welcome to Souq News Television. We are reaching you live from our studios in the commercial city of Lagos. I am Oyin Priye Krumale. It's a fantastic Wednesday morning. Now we begin with today's business. Nigeria's economic reforms are entering a decisive phase as the government pursues bold initiatives to modernize trade, finance, development projects, and rebuild public trust in institutions. Now, from digitizing trade operations to securing historic external loans and tightening governance norms, these actions carry far-reaching implications for businesses, markets, and national development. Welcome once again to Souq Business Landscape. I'm not here by myself. And good morning to you, Chooks. Good morning to you, Olumide. Gentlemen, welcome once again.
Thank you very much, Priye. Good morning. And everyone out there, welcome to your show.
Great. It's your show.
Good morning, Priye. Welcome to Souq Business Landscape, where we talk business, economy, and development. I am Olumide Shokoya, so glad to be here.
Great. Gentlemen, 27.5%. CBN maintained it again. This time, I want to know if it's the same excuse that he gave before. He is going to repeat because we have a track up for him from the CBN governor. We are going to listen to as we jump into the main business of the day. But the first time the Central Bank of Nigeria maintained its benchmark, the rate was at 27.5% for the third time running, citing declining headline inflation but persistent cost pressures in services and housing. Then we will now move to the oil and gas sector, where Aliko Dangote has warned that Africa forfeits about $90 billion annually to petroleum imports due to poor refining capacity. He urged governments to harmonize fuel standards and support domestic refiners to spur industrial growth and job creation. Then we go to Forex, as the Naira traded flat at 1,535 Naira to the dollar in official and parallel markets, as the external reserves climbed to around $40.1 billion. Then we move to another round of borrowing. The Senate has endorsed Tinubu's $21.5 billion external loan request to fund Nigeria's 2025-2026 development agenda, including infrastructure and human capital development. And lastly, the House of Representatives is considering a bill banning officials and their families from using private schools and hospitals. The goal is to review confidence in public institutions and curb elite dependence on foreign services. This, I will say, is a good development. But don't let me go ahead of myself. We'll take a breather here, and when we come back, Souq's Business Landscape kicks off. Do stay with us.
Think like that because it's the mind that needs to first of all be rebranded.
He said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff?
Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Think like that because it's the mind that needs to first of all be rebranded.
He said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff?
Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Welcome back. Many thanks for joining us on the program. Now, let's jump into the business of the day. The Central Bank of Nigeria has retained its benchmark interest rate at 27.5%, marking a third consecutive hold as the headline inflation eases for the third straight month. The CBN Governor, Olayemi Cardoso, said the Monetary Policy Committee voted unanimously to maintain all policy parameters, including the asymmetric corridor, the cash reserve ratio, and the liquidity ratio, despite a decline in annual inflation to 22.22% in the month of June. And core inflation and monthly rates rose slightly, reflecting persistent costs and pressures in housing, services, and communication. Olayemi Cardoso warned of lingering risks from global trade disruptions and urged continued vigilance, to sustain macroeconomic stability. He noted that the rising external reserves of 40.1 billion, steady GDP growth at 3.13%, and progress in banking recapitalization, with 8 banks surpassing new capital requirements. The CBN remains focused on disinflation and price stability, expecting further easing driven by harvests and a stable Naira. However, the governor called for cautious optimism and ongoing support for agriculture to safeguard food security and curb the inflationary pressures. That's where we are now on that story. But you know what? Let's hear it from the OC's mouth, the CBN governor. He speaks on this issue. Let's take a listen.
Decision of the MPC. The committee decided to maintain the current monetary policy stance and hold all policy parameters constant as follows. 1, retain the monetary policy rate, MPR, at 27.50%. 2, maintain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3, retain the cash reserve ratio, CRR, for deposit money banks at 50% and for merchant banks at 16%. And 4, keep the liquidity ratio unchanged at 30%. The decision was premised on the need to sustain the momentum of disinflation and sufficiently contain price pressures.
Welcome back. You heard it from Olayemi Cardoso, the Chief Executive Officer, the Central Bank of Nigeria Governor. Now, we will be looking at this specific story with a guest who will be joining us to, analyze the story. We'll look at it from left, right, and center and try to make some meaning to you and other Nigerians. His name is Gabriel Osilama Inomo. He's a graduate of Olabisi Onabanjo University in Ogun State, where he obtained a BSc in Banking and Finance, an associate of the Chartered Institute of Bankers of Nigeria. He also attended various executive management courses while he traverses the banking industry. Gabriel Osilama has over 25 years of managerial experience in banking, finance, management, consultancy, and oil and gas. He's also a policy expert. Gabriel Osilama, good morning to you. Many thanks for joining us live on our studios, virtually though, SouqNews Television.
It's a pleasure to be here. Thanks for having me.
Thank you very much. Now, you heard the CBN Governor, Olayemi Cardoso, during the MPC meeting that was completed recently. That was by yesterday. It started on the 21st since Monday, and they've been on it. And it looks like he's maintained the status quo in all parameters. What came to your mind when you watched it, or from the outcome of the MPC meeting? What can you make of it?
Yes, when I heard about that news, for me, I feel the CBN is more or less concentrating more on targeting inflation, performing its law of price stability in the economy. That is expected, but for me, there is need for the monetary authorities to realize that price price stability, the law of price stability and economic growth, which has been an issue of which of these device to follow in order to sustain growth in a development economy like Nigeria, it should be of paramount concern also to the monetary authorities. That is where my concern is. How can we stimulate growth in an economy such as ours when interest rates kept on going on the north trajectory? I think this is my concern and my fear of this policy starts as announced by the CBN governor yesterday.
Thank you very much, Mr. Gabriel. My name is John Rogers Chooks, and I welcome you again. It's nice seeing your face on the program again. From what we've seen over time, and CBN, we are happy they did not increase the rate though. But now, let's look at that particular growth you were talking about, which I know you are very interested in. Over time, in the last 4, 5, 6 years, the major engines that we've seen grow more are the banks, both lender banks, both the commercial banks. All the banks, at the end of the year, we see humongous them declaring interest and all that. But right now, we are seeing liquidity ratio still at 30. Yet they are recapitalizing 500 billion. Shouldn't we see something more? Let's say at the end of this meeting, the CBN governor is asking more from them. You are asking for stimulation of growth for the economy. Shouldn't we see it coming from the bank side?
Yes, the banks are profit-making organizations. We must have this one in mind. If there's any policy instrument that favor them, they will take advantage to maximize their returns. So when people out there are putting the bulk on the banks, I stand to disagree as much as I can. Yes, the responsibility of government is to moderate this market, to make sure the market is fair to all participants. The growth I'm talking about is not about the service industry, which the financial services which the banks fall into. We are looking at the real sector and the agriculture. And this is area of concern. You remember the government intervention into the economy after a major policy shift when this administration came in. At the time, they have to give waiver to import of food into this economy. And this should not be. In an economy where the benchmark interest rate is at 27.5%, and what do you expect? That means there is no borrower in the economy that can fall below this price. They need to make profit, because if they have to borrow from the CBN, which is the lender of last resort, they must, as a matter of fact, make a premium on this benchmark rate. So, for CBN to maintain this rate at this time, for me, it is not healthy for our economy. It will not encourage the agricultural value chain. It will not encourage the manufacturing sector. And these are the impacts. Remember the rule of supply and demand. When there is sufficient demand of these basic needs of the average man on the street or basic household, then price will be moderated. There will be more money in their pocket to do other things and fall back into development. This is where my concern is actually is.
right, thank you very much, Mr. Gabriel Osilama. I am Olumide Shokoya. Once again, welcome. So I'd like to ask you also, is this current interest rate, is it supporting or is it undermining the Naira's value in the Forex market?
Yeah, what they are looking at is supporting the Naira value. They are trying, remember, the policy target of CBN in controlling inflation is the aggregate money supply in the economy. So when you target money supply, it constrains FX price volatility in the upward trend. So that is what the CBN is concentrating on. Yes, it's supported to maintain a stable Naira exchange. But my concern, which I always adhere to, the CBN cannot do this alone. The household savings, or surpluses is not what is it's not impacting so much on money supply. What is impacting on money supply, which some analysts have advocated, is the aggregate rent-seeking tendencies in the economy. When you have an economy that you still have most participants hopping around government, contract, inflation, and all that, though we don't have statistical evidence to justify that now, but the perception is that the rent-seeking tendency in the economy is high. So when this is what is in operation in an economy as ours, this drives money supply. So the physical authorities work in conjunction with the monetary authority to combat this, you cannot actually said to be combating inflation through monetary instruments alone. We need to see more of action of EFCC. We need to see the Nigeria ICP doing more. We need to see more policies from government that drive compliance and get it done in a transparent manner that give equity to all economic participants. With this, we support monetary instruments to control money supply in the economy and thereby target the inflationary rate.
Okay, thank you very much, Mr. Gabriel. Now, when you were responding to my colleague Chuks' question, you made a reference to the fact that you don't think the CBN is doing much. You don't expect them to go the direction which they went. Now, do you remember that the last, not this immediate MPC meeting, the one before it, Olaimi Cardoso said the reason why they are maintaining the status quo is for the country, for the economy to yield to the benefit that has been coming from the economic reforms of the government and also from the reforms that the CBN has been carrying out with regards to some of the ratios that they maintained during the previous meeting. And it looks like it is yielding some form of result. As we speak now, about 8 banks have met the threshold of the capitalization of over 500 billion naira. And the government is looking at an economy that is going to give 1 trillion naira. Don't you think if it continues in this line of action, we might get to the promised land?
I do not see how this monetary policy stance will support banks' recapitalization. I do not see how it supports it. It can support price stability. First, the capitalization of banks has nothing really doing with the decision the government has taken. Be that as it may, rather the banks are shopping for funds using various means of capitalism in order to meet, to be in a position to be able to do big business, which is good on its own. This play out during the regime of Surudu, now governor of Anambra State. We know the amount of innovation that followed that policy pursuit. So if we can move to this policy direction of CBN in trying to encourage banks to recapitalize, I'm sure it's going to boost economic activity. But again, in a situation where you have 50% of your deposit tied down into liquidity, cash reserve issue, liquidity ratio constraints, and now you have interest rates at this double digit, when ordinarily we're supposed to be driving down interest rates to single digits so that basic consumers can access funds, so that production sector of the economy can access funds from the banking system, so that even government can borrow at a lower cost. So in a position where you have this policy conflict, that is where I keep saying I am not comfortable with. Rather, I have advocated here. Yes, the CBN, they are performing their function. We have MPR at 27.5. We have a CRR at 50%, which means the banks can only consider less than 20% of their deposits for lending purposes. They have been held down. So the more the capital is, the better. But again, before we get there, the economy needs to grow. So I've always advocated there is need for government to look for a way where the physical authorities and the financial, the monetary authorities can have what we call policy congruency. They should be able to meet at a point to moderate all these rates without without necessarily intervening in the constitutional rights of the monetary authorities. The way we are going, targeting only inflation at the detriment of growth in the economy, I don't think it's comfortable for an economy that is crying for growth. Remember, if there's no growth in the real sector, if there's no expansion in the agricultural sector, how will we absorb the graduates that are turning out on a yearly basis and they need a permit, they need to be engaged? And that is why the unemployment rate is on the highest, is growing on a daily basis. Our government needs to moderate all of these factors.
Yes, Tricks.
Okay. One more question. You spoke a lot about the physical and monetary authorities working hand in hand. You spoke also about the inflation and the reasons they gave for maintaining that particular rate, 27.5, which we all know is high. Now, I really want to know your stance on the connection between these handlers of our economy and the real people pushing the economy, not the big conglomerate, the market woman, the vulcanizer, the people down there. When we talk about too much cash in circulation, who exactly has this cash? Is it the people here, or questions that we are not sure of where the answers are?
The connection, that is the connection I was trying to explain. Where is the cash? If you go to the vulcanizer on the street, the duffel driver, the Okada rider, the people who, the artisans, for instance, do they really have this cash? Everybody in the economy, major participants, that policies are supposed to impart on or imparted on, they are crying. They don't have cash. They don't have cash. They don't to grow their small-scale business. So that is where I said the reality is for the physical authority to have a way. I think we experienced it during the Obasanjo regime, where our Reverend Okojo-Iweala was the Minister of Finance, the economic team meet to say, oh, let's look at the policy options. If we trade off this for that, how will it benefit the average man in the street? I think this is the trajectory I want the government to moderate this. So where this is coming from the rent-seeking tendencies in the economy.
All right. Okay. Thank you very much, Mr. Gabriel Osilama. So if I may ask, what impact will this high interest rate have on small businesses, job creation, and consumer spending?
Yes, the high interest rate will restrain manufacturing companies, the agricultural sector, from it will restrict them from borrowing because the cost of borrowing will be high in their books. And where they cannot access borrowing, they cannot be able to expand. When they are not expanding, they will not be able to employ more hands. And if you look at it from the other hand, where they are borrowing at a high rate, because funding is very essential to production. Of course, they will pass this cost. They have a way of passing this cost to consumer. I and you pay for it. If that means an item I ought to pay so less, I'm paying so much to get it. So if I am paying more to get an item or a consuming item, how will I be able to buy more? I will not be able to consume more. So it have a negative impact on consumption.
So, Gabriel Osilama, are you still there? Are you there? Can you hear me? Okay, I guess you will join us back again. Hopefully, we won't lose him cheaply that way. So, I think it is the same story that Olayemi told during the previous MPC meeting that he actually reiterated. And one way or the other, we have to exercise some form of understanding with him, because recently he also spoke about or made allusions to recently about a few trillions of naira, if not between 4 and 8 trillion naira was shared between the federal, the state, and the local government. And Olayemi was saying that that in itself, is going to increase the amount of money
in circulation. And his fear of inflation.
And it's going to defeat some of the disinflationary, measures that have been put in place to curb that. And I was wondering, but we need this money to move in the economy for the production of infrastructure. Some of these monies will go to capital expenditure. Though we also understand that some of it will go for liabilities as well. And this actually should, buoy or in other ways, in any marginal way, increase the spending power of some of these agencies, which will trickle down to the man on the ebb of society. How is that a disadvantage?
First of all, these particular allocations were already in the budget of local, state, and federal governments, because everybody has a budget for the year, and you were looking at funding that particular budget based on these allocations that were coming for states, local government, and the federal. So looking at that and giving that assumption, well, he has reasons why he's saying that, but also remember that for all these monies, they've been budgeted for specific spending projects or infrastructure, just like you said. So that should not be our problem. If we say we are looking forward to building a $1 trillion economy, is it a 1.9 that was shared in June that we should be worried about? Okay. We have bigger fish to fry. Yes. So that is where our focus should be. I have a problem, personally, when we keep using foreign theories on our economy. Just like our guest was saying after the question, who exactly has this money that we are shouting is causing inflation? we here know is not the guy that is productive. It's not the producing person. Because the producing person needs the money to get productive. But that money is in the hands of people that are not productive. So until we have a situation where this changes hands, where this particular money CBN is shouting about, which, yes, is there, but is in the hands of the productive person, then we'll have less problem.
So I was beginning to think, if you say they are in the hands of non-productive persons, how did they get the money into their possession? Or how did the funds actually flow towards that direction?
I'll just answer the question. We
We
have a whole lot of people in the corridor of power.
Yes.
Doc will call them rent-seeking passengers. They are just there waiting for one contract or the other. Then we have some government functionaries or people within the public service taking funds that they should not take. And these funds are not even in the banking system in the first place. So these are things that we need to tackle as a nation and get productive. That is our major watchword, production.
But Chooks, if you look at our foreign reserves, it had grown from $39 billion to about $40.1 billion.
You know, that's a full different school when we go there.
Okay. and also the steady GDP growth of 3.13%, progress in banking recapitalization, like I was speaking to Gabriel Silama, and how disincentivizing disinflationary things that could affect the economy seem to be the headwind. But I was looking forward to at least having 27.5% MPR rate going down to at least, even if it's just 26.5 or 26. But if he's going to be saying that the 1.9 trillion shared in the month of June is going to defeat that disinflationary pressure, then I'll begin to wonder. In fact, you said you were looking forward to bringing it down. Then it's a miracle. It's a miracle that he actually maintained it, because it would have gone up. It would have gone up to about 28 or 28.5%.
True. But you know, well, again, there was a poll that was done, and a lot of people even wanted it to come down. I said, I think yesterday, that they should. It's better they either maintain it or reduce it. So maintaining it, well, just like Trick said, where is the money, first of all? that money that they are saying is causing inflation, where is it actually? Is it reflective on small businesses? How will they affect small? I'm also worried about small businesses, consumer spending, job creation. How would this affect them?
Obviously, from the way we see, it doesn't look like the purchasing power of the man and the ebb of society doesn't look like it's a priority at this moment in time, because if all we're looking at is to get cash, to limit
mop up cash,
the circulation of cash in the society or in the economy, it looks like we might not be heading the direction where we could see some form of hope in increasing the purchasing power of the man and the ebb of society. Chooks, there's something you also spoke about that I need us to quickly reference before we go on a break, and that has to do with agriculture. He referenced that because he said he was thinking that we are going to direct some of our actions there. And so when we give out loans, how much do we have, or what's the policy direction of the CBN to banks to give out loans towards, is it the agriculture or to SMEs on renewable energy or to other sort of business endeavors, so that we can see those industries grow?
Okay, this is when we talk agriculture, it's not something that is fictional. It's not something that is somewhere in the air. As a country, we should be very practical. Very, very practical. The president himself should lead the way. Agriculture is plant, grow, harvest, process, feed, sell. So it's practical. And it's not something that is alien to us. As a people, every single person born in this country has seen grass, has seen soil, has seen plants grow. So it's not alien to us. So when it gets to that particular sector, I am tired of listening and hearing lip service, a whole lot of talks, symposium, conference. No, we should get down there and plant. Get down there and build silos. We've imported a whole lot. Let's get the work going. Right now, we are in rainy season. Before we start talking about irrigation and spending more, trying to get the ground watered. Every single sector. If you ask me, I will tell the president, send the Minister of Agriculture to Niger State. Let his office be in Niger State. Yes, send the Minister of Husbandry to Sokoto or Bauchi. Let his office be in Sokoto or Bauchi. Send whoever send them to Abia, that is where we have the oil palm. We need to see people doing work, not people carrying files and conferences. With that era is gone. We don't have the monies. Nigeria should be able to look at ourselves in the face and tell us, we don't have the money you're seeing on those papers. We need to work and make it. Put food on the table first, then we can have enough to sell and process.
All right. We don't have the money, Mr. Chuk said. Well, hopefully we will have it. Then we'll go on a break. Souq Business Landscape continues when we return from the break. To stay with us.
Take Nigeria because it's the mind that needs to first of all be rebranded.
Idris said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Welcome to Femi Walsh Limited, owners of Souq TV Lagos, Our Radio Lagos, Kaswa Radio Kano, and of course, Emirates TV Abuja and Dubai. Our niche market for media is business, economy, and development. At Femi Walsh, we promote your company's products and services using our world-class facilities. From Our Radio to Souq TV, what you get is nothing but the best of the very best.
And if you're looking for the premium production firm for your events and corporate coverage, think no further, because we offer you the best of industry stuff.
With high-definition cameras ranging from 4K to 8K multicam setups, high-directional microphones, and real-time streaming encoders, we give you a production like none other. And if you're looking to produce podcasts, adverts, and documentaries, our team of experts will ensure that you convey your message clearly and professionally. Femi Walsh, Global Vision, Local Impact.
Anthony Onyemaechi Elumelu was born on the 22nd of March 1963 in Jos, North Central Nigeria, to Susanna Dominic Elumelu, originally from Delta State. Tony earned a degree in economics from Ambrose Ali University, where he laid the foundation for his future career, and then furthered his education at the University of Lagos, where he obtained a master's degree in economics. His academic journey also includes attending the Harvard Business School, where he completed the Owner of President Management program, equipping him with advanced business management skills. Tony currently serves as the chairman of Heirs Holdings, Transcorp, and United Bank for Africa, UBA, demonstrating his significant influence in the banking and investment sector. He founded the Tony Elumelu Foundation, which aims to empower African entrepreneurs through comprehensive training, mentorships, and funding opportunities. In addition to his professional achievements, he's also a family man, married to Dr. Adele Vivian Elumelu, and together they have 7 children. In 2020, his efforts were acknowledged when he was named one of Time's 100 most influential people in the world. Anthony Elumelu's net worth is estimated to be around $700 million, a testament to his successful ventures and strategic investments. Elumelu continues to be a driving force in the business world, advocating for sustainable economic growth and empowering the next generation of African entrepreneurs.
needs to first of all be rebranded.
Said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Welcome back. Many thanks for joining us on the program. And there went our conversation with Gabriel Silama Imomo, who has over 25 years in banking and finance industry. Now we move on to our next story. Aliko Dangote, the known business mogul, has raised concerns over Africa's continued dependence on imported refined petroleum products, warning that the continent forfeits nearly $90 billion annually due to inadequate local refining capacity. Speaking at the West African Refined Fuel Conference in Abuja, he stressed that Africa refines just 40% of its fuel needs, despite producing 7 million barrels of crude oil daily. He warned that reliance on imports invites substandard fuel into local markets and costs the continent jobs, industrial growth, and investment opportunities. Dangote also highlighted persistent operational challenges, including sourcing Nigerian crude at competitive prices, high port charges, and foreign exchange volatility. He urged African governments to harmonize fuel standards and adopt protectionist policies to safeguard domestic refiners. Meanwhile, the Nigerian Midstream and Downstream Petroleum Regulatory Authority called for a regional pricing benchmark reflective of Africa's market realities to drive intra-African trade and ensure transparency. Lawmakers warned against political interference in regulatory boards, saying it could damage investor confidence in the oil and gas sector. Chooks. It was on the news yesterday. It was on the news the day before yesterday. It's in the news today, and I have no doubt it's going to be in the news tomorrow. Now, he said $90 billion. That's what we're losing as a continent annually. Chooks. If we make that consistently, or even if we make that as a continent, $75 billion annually, just in the oil and gas industry, the whole continent of Africa, for 10 years, or for 8-7 years, we will know where we will be heading. It's going to be reflective in the economy and in the continent. It's like we've waited for him to raise the alarm again. Do you see this as trying to sell his own product? Or because he's, this is where he plays now, like he's trying to market himself, or he's being altruistic?
Okay, the world itself is a marketplace. We all come to markets. We are all selling something. So it's either you're selling something or you're being sold something. So you choose your divide. For Dangote, this issue has always been there. So for him to have put figures and data to it, that's good. Right now, he is speaking not just as Dangote, he is speaking as the head of a refinery in Africa. And he has to talk business and sell his refinery too. What he's saying, is it the truth? Definitely. Africa has been at the receiving end of the market. We go to the market to buy. We've not been coming to the market to sell. We just take crude, ship it abroad, and they on their own side will refine and ship back to us refined product at a higher cost, and we have to buy. And it has been like that for ages, thanks to politics, and people that have refused to think. Now, we get to ask ourselves this question. Foreign companies have been drilling oil in Africa from get-go. Why have they not built refineries in Africa? Because they know that it's more profitable.
For Africans?
For them.
If they build in Africa, it's more profitable for Africans.
Yes, if they build in Africa, it's more profitable for them, less profitable to them. They will make profit, yes, but it's more profitable to them to just take the crude and go, knowing fully well that in their own climb, in their own countries, they are also invested in refineries. So they take the crude from Africa, sell to who they want to sell to, send the remaining to their own refineries, refine it, and come back and sell back to you. So sometimes if you look at that particular equation, you tend to ask yourself, wait a minute, is something not wrong with this other person? And that has been going on for a very long time, because some few individuals who control and play in that particular sector that happen to be Africans are not patriotic at all.
Business before pleasure. Business.
Whose business exactly?
Is it going to be business before patriotism? Or we are talking about those who are in government, who should bail the cat in what you're trying to say?
It's not just those who are in government. Government is everybody. Government is a collection of all. Once your wheels are oiled, it doesn't concern you anymore. That is what we've had for a very long time. And even those that are liquid enough did not want to go into that particular endeavor because they did not see themselves as Africans. They did not see themselves as doing a duty to their motherland. They just wanted to drill, sell like the same West were selling and just make their quick money, profit. Nobody wanted to take that risk of standing in that particular gap and seeing Africa work. But now things are changing. And we have to support that change, not just be part of the change. We have to support that change. Now, if you look at the refineries in the West, some of them are closing down simply because of Dangote refinery. He's producing more. Now we have the US coming to source for his aviation fuel. So imagine what will happen over time when we have more refineries spring up in Nigeria. We need to wake up and do something. Now, there's something he spoke about. With time, we'll talk about them. But let's talk about the port issue.
Yes. He also referenced the port. And before we come to the port issue, Olumide, your take.
Well, it took us almost all. But one of the things that causes trade imbalances is when you're importing more than what you're exporting. Just like he said, you're exporting more crude. It's refined there, and you're bringing it back at a higher expense. It also depreciates the value of our currency. It also causes inflations because it brings about high cost of fuel, brings about high cost of transportation, food, and every other thing. So I don't see Dangote as marketing himself. He's just telling us the truth. Now, when he says Africa is losing $90 billion, what he's basically saying is Africa is spending that $90 billion in importing. Now, imagine if that $90 billion is being reinvested back into the economy. I think one of the things we are suffering from is refinery capacity. And it was so sad when, what's his name, Ujulari, proposed of selling off the NNPC refinery. It was so disheartening. Because when do we get to the level that we can say that, yes, we can even service the Nigerian economy? Talk more of now exporting out.
Okay. But you know, you said it was a sorry situation when Bayo Julari, was mentioning about selling the national asset with regards to the refinery. We all on this table spoke about how billions of dollars had gone into the turnaround maintenance exercise of the Warri refinery, the Kaduna refinery, the Rivers refinery, and we're not getting value from our money that we used in those turnaround maintenance. And I also remember Chooks was saying that we need people who are liquid enough to go into the space to do what Dangote did. After what Dangote did what he did, he also lamented. Remember, those who do not have capacity like he does, who will just crash under the weight of the fight that he got into, both internationally, globally, and locally. So it requires, for not literally, but someone with two hearts to actually do what he did. But if you refer to something very important. Bayo Julari is making that proposition, though he's receiving bashing from Femi Falana and from some other experts that the Constitution did not, that is against Constitution, you cannot sell national assets. So, but the thing is, if it is there, and the government is not performing and working up to his responsibility to make those national assets to work and bring back profit the way Dangote is doing. So why do we keep them back?
Why are they not making it work? That's the question we need to start asking. Accountability. If so much amount of money is expended into a particular thing and you don't see results, what is the next thing you're supposed to do? Carry out an investigation. Whoever is in charge, whoever, you bring them for a Senate hearing. Let them give account.
Why the refineries?
Why is the refinery? If we have been doing this for years before now, we would have gotten, maybe some of that money that was lost would have been recovered. We hear of EFCC, ICPC. What are they doing? What have they been doing? NNPC is like they've been given some form of, like quote unquote, a blanket immunity or something. But if we have been doing this before, it's all about accountability. That is why it has gotten to this level, because nobody has come out to say, this person, what happened? This person, now we're pouring everything on Ojulari. And of course, he just came in. He would do whatever is necessary to save himself from a sinking ship.
Yes. So, Chooks.
Yes. Earlier on, before we got to this particular story, we were talking about inflation and said there was a lot of money in circulation that we can't find. So these are where those, these are another avenue and means at which those particular monies disappear, and we can't find them, and we think is in Olumide's pocket. NNPC over time has been a conduit for this kind of transactions. You mentioned well over how many billions of dollars over a long period of time, getting in services.
Turnaround maintenance.
Right now, that maintenance is not being turned in anymore. Getting into services, getting into that particular corporation, and there is nothing to show for it. Absolutely nothing. Only for us to hear is going to be sold. So these are issues where crime and punishment needs to be in the forefront.
But Chooks, now that we see some form of advice coming from professionals and experts that have been appointed by the administration to head the running of these refineries, and we heard the suggestion coming that we need to sell off the refineries, and we're meeting a brick wall, or something I would call a brick wall for now, that we can't sell them.
Yes.
How do we overcome that dilemma? It consumes money because we are going to continue to maintain it.
Definitely, the NNPC has failed in making those refineries work. They have not only failed, they have fleeced Nigerians in the name of making those refineries work. So we need solutions. So if the men in the helm of affairs say selling is the best, and the other opposition is saying no, don't sell. So people should now come up with solutions. If we don't sell, what is the solution? So that way, the facilities don't just stay there and deteriorate. So we need solutions. If you say, no, don't sell their national asset, okay, good and fine. What are the solutions you're proffering? It's not a museum.
Okay, it's not a museum. Before we leave this story, we're not going to leave it completely because we still have the area of the seaports.
Yeah, Dangote is talking about the seaport.
Yes, the refineries. Please, the state governments should get ready to tender a proposal if there's going to be a bidding process for them, so that the states, Delta State should buy the one that is in Delta. Rivers State should buy the one that is in Rivers, and maybe Kaduna State also could do that, so that it could be run as a state-owned private entity. I'm sure if they bring some consortium together, they'll be able to achieve that.
True.
Because if they do that, it will be good. It will get off the shoulders of the federal government, and hopefully they can make something meaningful out of it. So, Chooks, the seaport.
Yes, Dangote was talking about high cost of doing business at the port. Now it's more like a phrase, but we know where he is going to. Definitely, apart from the Tinkan and the Apapa port, which are congested as we speak, and also they've not been upgraded to that particular capacity to move either liquefied natural gas or crude, because it's not coming from that angle of it. Now, he is looking at an opportunity to be able to move this particular product. And with the port that is close to him, he's looking at building another one to service his conglomerate.
Okay.
Now, is business sense? Is it good for Nigeria? Definitely. Do we need the infrastructure? Definitely. So I would say yes, good and fine. Kudos to him. He has the refinery, he has the cement factories, he has the fertilizer factories. Now there is a port coming close. The next thing we were looking at is government or whoever coming with a rail line to connect all the ports. So we know that goods containers are either going into Nigeria or going out of Nigeria seamlessly. We need to get productive. So every avenue that will afford us that opportunity, we need to welcome it.
Great. So, that's for that. Now let's move to our next story. The Naira closed flat on Tuesday in both the official and parallel markets as Nigeria's gross external reserves rose to $40.1 billion, according to the central bank governor Olayemi Cardoso. At the Nigerian foreign exchange market, the Naira traded at 1,535 Naira 23 kobo to the dollar, a slight drop from Monday's 1,532 Naira 54 kobo. Meanwhile, the parallel market rate held steady at 1,530 Naira. The CBN attributed the reserve boost to improved oil production, non-oil exports, and reduced import volumes, supporting nearly 9.5 months of import cover. The Monetary Policy Committee noted stability in the forex market backed by stronger inflows and policy reforms. Access Bank analysts reported a marginal Naira depreciation due to increased demand, but expect near-term stability. Renewed foreign portfolio investment helped forex inflows reach $1.31 billion last week, narrowing the gap between official and black market rates to just 2 Naira. The development underscored growing investor confidence and the impact of ongoing CBN reforms on exchange rate alignment. That is what brings about the development. There's something significant that he mentioned there. Reduce fuel imports. Some of the advantages that we are currently enjoying now is due to reduced fuel import and the relative stability of the Naira to the dollar, which he referenced as 1,530 Naira. In my head, I calculate that as still being on the big side, or maybe I'm just too overambitious. What do you think, Jukes?
You are not being overambitious. The beautiful thing about this is
that catchword, stability.
Stability.
That is very good for business. If you remember, just not too long ago, just last year, the fluctuation of the Naira was massive. Companies closed down overnight because of the rate of devaluation that happened to the Naira in less than 2 months. Now we are having something that is stable, and we are grateful for it. Now, we also need to talk to the fact of patriotism.
Okay.
And the government having a policy of protectionism. We need that. Let's forget about this.
Borrowing from Donald Trump.
We're not borrowing from anybody. Let's forget about this global here, global there. No. Let's think Nigeria and Nigerian businesses. Now, why and what stops the country from saying, if you are going to seek FX from us to go bring in something from outside that we can make here? No. Or go source it yourself outside. CBN can do that. Left for me, on my own thought, I will say CBN, since we have a refinery right now, and we have NNPC that have refused to work, let's cut down by 75% the amount of FX we give to anybody going to import any petroleum product. So we only have 25%. So the other 75% go source yourself outside. They will invest in that particular sector and produce here. That way we'll have less stress on FX and less stress on Naira getting devalued, because that stability will be there. We'll have enough of it. And Naira can gain value. These are areas we should start looking at. What are we importing a lot of luxury items for? Put the tariff on them like yesterday. For every of those luxury items, that is not the normal everyday staple. Put tariff on them like yesterday.
Okay, so Chooks, now I remember when we were looking at the news and we saw that our foreign reserve had depleted to about 38.8. Yes, 38.9 billion dollars. And within that space from that time till now, maybe about a month or 6 weeks, or let's say about 2 months, we've gone to $40.1 billion in reserve. And all this is being attributed to the yields that is coming as a result of the economic reforms, the CBN reforms.
More oil sale.
Reduction in oil imports, which actually show up the Naira.
Yeah. Thanks to Dangote. Always give him his flowers.
Haven't you done that enough?
we can't do it enough. Or the other players coming.
Yeah, the other players coming in. So, Olumide, what's your take on this story?
Well, Chooks has said it. Until we start to produce in Nigeria, we will continue to source for FX, to import, and do so many other things. I like that plan, or that move, or that recommendation Chooks made. I hope federal government would listen. The 75% reduction and only give out 25%, and you go source for that.
For goods that can be produced locally.
Yes, for goods that can be produced locally. It's a very good move. It's a very smart move. I even said it, was it you or Chooks I said yesterday that even the 30% local processing, I do not agree. Let's push it up to 50% or 60%. Those are the things that we have to be aggressive, yes. We have to be aggressive if we really want to move from a consumer nation to a productive nation. We have to be aggressive about it. So we have to do so many things, block so many leakages in a way that Nigerians themselves will be forced. Now, if you now look at the interest rate, that's another story. Because if we are going to get to where the promised land, we need to operate a single digit.
We need to operate a single digit. Okay.
So that, yes, local manufacturers can have access to, funds to be able to expand and all that, But the major thing is, just like Doc would always say, is the mindset. We need to start rethinking ourselves that what can we do in this country? How can we? There are so many things we can actually produce in Nigeria. There are just so many things we can actually produce. But then again, if you go to the market and you hear something is made in Nigeria, 50% chances are you might want to go for the one that is imported.
Would you buy it?
I like the shoe I'm wearing.
It's made in Nigeria. Would you buy it?
Definitely.
Well, I also think you will buy it. I also want to think so because you do not have any idea. Patronizing Nigerian goods, from shoes to bags to clothes, you just name it, including the consumables. Some of these consumables come from factories in India, in China, and we have local substitutes for them. And those are the goods that Chooks is saying the government should put tariff them. We're in a tariff regime globally. We should wield the big stick as well. I hope the government is thinking in that line. We'll go on a break, and when we return, we'll continue with other stories. It's Souq Business Landscape, and we are reaching you live from our headquarters in Lagos. To stay with us.
Take Nigeria because it's the mind that needs to first of all be rebranded.
It said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizens. Promises, see something. This is Souq Business Landscape.
On the 19th of August 2025, Paris will come alive with the prestigious People's Choice Governors Awards taking place at the Gauche Hotel, Paris. The prestigious People's Choice Governors Awards is designed to celebrate governors who have contributed immensely to their states in different countries across the world. If you are a governor who's gone above and beyond to deliver transformative projects in your state and country, then this award is for you. To partake of the Governor's Excellence Awards this year taking place in Paris, all you have to do is send an email to SouqNexus.com with the words, "I accept," and we will get right back to you. You can also send a WhatsApp message to the WhatsApp number scrolling on your screen right now. You don't want to miss Paris for anything, and we are looking forward to celebrating you and your achievements this year. So contact Souq Nexus to make that happen.
Known as the father of African literature, Chinua Achebe was born on the 16th of November 1930 in Ogidi, now Anambra State, eastern Nigeria. He was born to Isaiah Okafor Achebe, a teacher and an evangelist, and Janet Anenichi Iluegbunam, a vegetable farmer. Achebe has reshaped the global understanding of African identity through the power of storytelling. Raised during the twilight of colonial rule, Achebe's education was steeped in both Igbo tradition and the Western values of post-colonial Christianity. As a student at the University of Ibadan, he became fiercely critical of how Africa was portrayed in Western literature. Achebe believed that Western literature often painted Africa as a dark and primitive continent, but he sought to tell the African people's lens. In 1958, Achebe's groundbreaking novel Things Fall Apart shattered colonial narratives through the tragic story of Okonkwo, an Igbo warrior. Achebe illuminated the complexities of African culture and the devastating effects of European colonization. Things Fall Apart became more than just a novel. It became a symbol of African resistance against the oppressive narratives of colonialism. Achebe was not just a writer. He was a passionate advocate for African self-determination, and his political activism made him a critical voice in the post-colonial era. Even after a life marked by personal and political struggles, including a car accident that left him partially paralyzed, Achebe continued to inspire. He taught at Bard College and later Brown University, where his influence reached new generations of writers and thinkers. He was married to Christiana Chinwe Okoli, and they had 4 children. Sadly, he died in March 2013 at the age of 82. Chinua Achebe's legacy endures in his novels, his essays, and in the countless voices of African writers who follow in his footsteps. He gave us a voice, a story, and a vision of Africa that is ours to share.
Idumota Market. Eko Idumota, once a residential neighborhood, is home to Idumota Market located on Lagos Island. It is one of the oldest and arguably one of the largest markets in West Africa. Idumota is a historic neighborhood adjacent to the Lagos port that facilitated the slave trade and later, under the British indirect rule, it surrounded to exports that fueled the colonial enterprise. Idumota was also the location of an armed forces remembrance cenotaph called Soja Idumota, built as a monument to Nigerian soldiers who served with the West African Frontier Force. An Eyo Masquerade statue and a clock tower are also some monuments at Idumota. Idumota market is so popular that large sales are recorded as early as 7 a.m. The market is made up of hundreds of locked-up shops occupying several multi-story buildings, with some measuring about 5 or more floors. In 2010, the Lagos State government demolished some illegal structures in order to improve vehicular and human movement in and around the markets. During weekdays, the neighborhood of Idumota is densely populated by shoppers, traders, and bus passengers. From the Carter Bridge, ascending into Lagos Island, passengers can see the neighborhood before disembarking at their final destination. Idumota market accommodates the substantial inflow of imported goods. The bulk of import from abroad are routed first through Idumota and then on to other markets through Nigeria and other West and Central African countries. The energy of private Idumota traders and wholesalers facilitate this activity, where millions of US dollars worth of wholesale is exchanged daily. Idumota markets, Souq Enlightenment.
Take Nigeria because it's the mind that needs to first of all be rebranded.
Said is going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Welcome back. Many thanks for joining us on the program. Now we've looked at a few of the stories before us. Now we're going to the next story. And the Senate has approved President Bola Tinubu's $21.5 billion external borrowing request to fund key development projects under the 2025-2026 plan. Also approved were a 15 billion yen Japanese loan, 65 million euros in grants, and 757 billion naira bonds to clear pension arrears. Lawmakers emphasized that the loans align with the already passed 2025 budget and would support infrastructure and human capital development. While most senators supported the plan as necessary for growth, some raised concerns over transparency and repayment details. The Deputy Senate President assured Nigerians that the funds would be used strictly for capital projects, with all regions included. Lawmakers stressed that the loans were long-term concessional and aligned with the fiscal laws. This is in the budget of 2025-2026 plan. Chooks, your take.
My take is, at this point right now, it's scary. I must confess. We have a 54.99 trillion budget for 2025. Out of that particular sum, 41.81 we anticipated we were going to get that amount for 1.81 trillion from revenue, internally generated revenue, oil, tax, all that. That's the anticipation. So the deficit was about 13.08, which means if we needed to borrow or look for how to get extra money, it was supposed to be this 13.08 trillion. Now, from the beginning of the year, we've borrowed not once, not twice, not thrice. Just a few weeks ago, we borrowed for the Coastal Road, which is also in the budget. Now they are approving
$21.5 billion.
$21.5 billion. If we do some multiplication, that is well over 32 trillion.
Would serve as the deficit.
That is almost 3 times the deficit in the budget. What happens to? We need clarification. The monies that have been borrowed before now, this same year, that we were told is funding the budget. What exactly are they funding? what is happening to internally generated? Are we funding the entire budget from borrowing?
Okay, but Chooks, don't you look, you rightly said about when you said 41.81 trillion naira will be sourced from revenue.
That was yes, for
if it's going to be
from revenue.
If it's going to be sourced from revenue, you also know that revenue does not only constitute the sale of oil, tax, and the remittances coming from some ministries, departments, and agencies straight to the single treasury account. But don't you also think that the borrowings are also revenue? Now, if the anticipated
which borrowing is
borrowing
revenue?
are also revenue, if the anticipated revenue is 41 trillion, currently we do not have 41 trillion to run the budget. And if we're going to wait until we completely get the 41 trillion,
we are not saying don't borrow. I don't know if you understand. We are not saying don't borrow. But we're looking at the rate of borrowing. This administration alone has borrowed more than every other administration right from this dispensation of democracy. In 2 years. Please. Now, we don't have a policy whereby whoever borrows must repay before they leave, before their tenure is done. So who are you going to leave that for? For children are not born. And now, let's also have in mind that by the time we calculate this 20.5 billion, there is a Japanese loan that is also there. There are also loans that we've taken now and last year. If we sum this up to the total, is way more than our foreign reserve. Way more. We are not the state.
If
we are not printing money.
Okay, if we have not completely done the calculation yet, we cannot completely say or conclusively say it is way more than our foreign reserves.
It is.
Of 40.01 billion.
If you add this to it, it is.
Okay, Olumide.
Currently, Nigeria's debt profile, internal and external, is about 149 trillion naira.
Okay.
As of now.
141 trillion. 49 trillion naira.
Both
internally and externally.
You've not added that.
You've not added this.
You've not added this.
The 32.1 trillion.
Yes.
What is that for?
You've not added this. This is the one we want to borrow now.
The one we want to borrow is talking about
not the Chinese own.
Okay.
Do you understand?
The one the Senate just passed.
So it's quite interesting. Now, Chooks mentioned something which I also want to reiterate. The payment term is expanding from 20 to 35 years, which means this administration, hopefully, if they pay these debts, if they pay these loans, they will not leave it for generations to come. But if not, generations to come would be paying back these loans. There's about 15 billion yen from Japan, 65 million euros in grants, and about up to like $2 billion in foreign currency bonds. It's a whole lot. And to think that legislators, people sit down and approve these budgets, I beg your pardon, approve these loans, it's mind-boggling.
Okay. But Olumide and Chooks, as we speak, the previous administration was spending in fact, almost 90% of our revenue in servicing budget, in servicing debt.
Not repaying.
Not repaying.
That's the sad part of not repaying, just servicing.
Debt servicing. So if this current administration came in, and it looks like it has been drastically reduced to about between 65-70% of debt servicing. The current debt that is servicing, or technically in any way paying back, was not a debt that was incurred by its administration. It's a debt that was incurred by previous administration.
So we should go more. What exactly? Where are you going to?
If government requires fund to execute projects, capital projects in the country, and the fund is not readily available, and from our forecast, about 41 trillion naira will be looked at what we got from revenue. Do you expect the government to just fold its hand and wait? is required to execute critical budget, critical infrastructure.
Can I
that contributes to the ecosystem in bringing about the same revenue that we're anticipating.
Okay. A businessman that is in business, when he wants to expand, what does he do? He calculates his cost. He calculates how much he needs to expand. And if he needs to borrow, what is the first thing he does? How do I make this money back to pay? How long am I going to be able to make this money to pay? What avenues, what sources, what extra work, what extra product am I going to put out in the market to make this money to pay back? These are the first thing he does before going to approach any financial house or anybody to, okay, good, this is my business, give me this money. This is what I'm going to do. I'll pay you back in this time. But are we doing that? Have we asked ourselves, okay, this is the revenue we project to make in the next 2-3 years, in the next 5 years. We are going to get gas up to this level. We are going to get oil up to this level. We are going to start production agri up to this level. We are going to make 40 billion in 2-3 years. And we're able to service our loans and pay this. And not just borrow because you can borrow and live because that has been the norm over time. No. We can't continue that way.
Chooks, how do we sustain even our current liabilities?
How?
How? Even whilst we are looking at getting money for capital projects, how do we sustain that? In June, 1.9 trillion was shared between the 3 tiers of government.
Okay.
Yes. And they had to meet obligations of paying salaries. They had to meet obligations of servicing the current liabilities and equally rechanneling that kind of money, some amount of that money, whatever accrued to this independence of nationals and the local government, to capital project as well.
Okay. We have a dysfunctional system here. Let me give you an example. We here that work here, we get to work as early, we try doing research. We come on air. When we are done, we try doing research for the next day. Outside this place, I can work here and still have a farm. I can work here and be seconding somewhere else. Now, our own time is spent research, present, produce. We have to get to a place where those sitting in government are not just seen as doing people a favor. We need to think and we need to work. We talk agri. How many people are actually in the farm working? We talk oil. How involved are we in that particular sector? How involved are we in the mineral sector? The same lazy attitude is what we have. We open up the doors and say foreigners come and mine. So they just mine and give you whatever fast cash. We don't want to get dirty and follow the process of really making the money off that product. This is what we should be doing. Every state at the end of every month come to Abuja and collect money. We need to stop it because it has ingrained laziness into us.
Okay, so
local governments are not doing anything.
Just a moment.
Waiting for allocation. We need to stop.
Just a moment. I completely disagree.
Okay.
When it talks about laziness, so I think you need to be more specific and maybe choosy concerning your words. The reason why I'm saying that if you say
you are looking at it from those from oil producing states, what exactly are they doing? It's the same oil that they're drilling. Who is drilling it? Federal government. Who else is drilling it? Foreign companies. What is the involvement of the state in it? Nothing. They are waiting for these people to get the job done and they collect derivative. What happens if they get involved in that drilling? What happens if they get involved in servicing those particular companies? It's laziness because of free money. Yeah. And it has happened over time. It's
not laziness.
Okay, hold on.
No, Chooks.
All the vast lands in the north, who is cultivating it?
Just a moment, Chooks. It's not laziness.
It's what?
I would rather we use lack of creative way to generate internal revenue. I would rather use lack of innovativeness.
Okay.
We're
trying to pamper ourselves.
No.
Okay, lack of.
I think we've seen some subnationals in Nigeria that are doing extensively well when it comes to internal revenue generation.
How many? Just a few.
Fine. Even though we are below
To be
average.
precise,
Even though we are below average in that.
I don't know if it's to be precise.
But there are laws, Chooks.
Others are just
these are the same laws.
Oil in their area.
Chooks, these are the same laws
okay.
that some persons have come out into public domain and said, look, we need restructuring. Some of the regions in the country have come and said, look, we do not understand the grammar restructuring. Could you please be more explanatory? Okay. Some persons have said, look, every state needs to have access, control the resources domiciled in their territory, and pay tax to the federal government. And you know, in the constitution that we practice, before it could be reviewed and amended, it's a cumbersome process. And
can I ask
just
you a question?
Just a moment. I don't want you to see it like I'm playing the advocate here, but I'm trying to bring to the fore the bottlenecks that are just right in front of us.
Okay.
That will make
can I ask
even little left, because people have cried out restructuring, pay tax, let's operate a confederation.
Can I ask you a question?
Is it possible?
How many states have taken the federal government to court for stopping them, the state, for stopping them from bidding for oil blocks? These are questions we need to start asking ourselves. If Delta is saying that we need to, okay, good, show us your capacity to do it in the first place. Have they shown it? No. Show us your capacity to run a refinery. Have they shown it? No. How many states have taken the federal government to court and said, we bidded for this oil block, you didn't give us? If individuals and businesses can bid for oil block, what stops states from bidding for it? If individuals can open a ranch, what stops states from opening a ranch? Instead of waiting for federal government to start opening ranches across the country. Is this mental laziness issue? Because money has always been flowing from the center. And we keep that same trend going.
Okay. Olumide.
Well, we just have to... It's a whole lot. I don't want to say much because Chooks has said a whole lot, and I don't want to flog this issue too much. But the only thing I can just say is, let's look at our current debt profile right now and how much we're going to borrow again. Let's add it up and divide it by the population. Then we'll understand why Chooks is a bit worried. I don't even know how much Priye will be owing now. Maybe Priye will be owing about 500,000 naira.
You will pay for two.
So I'm thinking, I just went through some brief calculation, and I'm thinking about $40 billion should be worth something about 61 trillion naira. So if you say our total debt at the moment is running to 100 and something trillion naira, 49 trillion, so it could be more, twice or three times, could be three times even more.
By the time you add this.
So it's something we really need to look and have expert input, so we'll be more clear on where exactly we are.
The next question I will ask, okay, we are going to have a budget for next year.
Yes.
Yes.
How are we going to fund it?
How are we going to fund it?
Great. The way we funded every other budget.
And we have also been told that we are running two budgets, 2024 and 2025.
Olumide, we are going to have that conversation another time. This moment we need to go on a break, and when we return, there's a special conversation we are going to have. The House of Representatives, that's the yellow chamber, the green chamber. They're raising the alarm, and it's a kind of alarm that you will like to hear. And the alarm is going to sound, we'll sound it in your ears when we're back from this break. Just stay with us.
Take Nigeria because it's the mind that needs to first of all be rebranded.
It said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizen diplomacy. See something. This is Souq Business Landscape.
Welcome back. Many thanks for joining us on the program. The House of Representatives has now introduced a bill seeking to bar public and civil servants from using private schools, private hospitals. Sponsored by Rep. Amobi Oga from Labour Party in Abia State, he proposed a law also extends to their immediate family members. Oga said the bill is designed to rebuild confidence in public institutions and end the neglect caused by elite preferences for private services, citing massive government spending on health and education abroad. Oga called the bill a necessary reform to halt medical and educational tourism. He argued that improving public trust in government-run services starts with officials using them. He urged the media and citizens to support the legislation to revive Nigeria's public institutions and restore national pride. Before now, I had this conversation with an analyst, and I made exactly the same law that the House of Representatives is suggesting now, that look, it's high time we speak to the Nigerian elite and those who are in government to not use private hospitals, not send their children to private schools, not patronize private institutions, because if you are being saddled with the responsibility and the public trust has been heaped on your shoulder to govern, to administrate, and to manage any government facility, you should go to use public facilities, because when the public sees that you're using the facilities, when we see that maybe the governor could take the BRT bus, or yes, maybe you could see the public officials taking the train in Lagos or in other states as well, use the public transportation system, it builds confidence on the way you begin to look at the service you are rendering to the public and how you can consolidate to cover up some of the lapses. And I'm not surprised that the House of Assembly is coming up, House of Representatives is coming up with this, and we need, if it's going to function, they'll need the buy-in of the Senate. Chooks, your perspective.
Okay, for public office holders, let's start with civil servants. Now that can work. Now they have insurance in the first place that works with for healthcare and education. That can work. But for public office holders in government, politicians, mind you, a lot of them are business people. They didn't make money off government, most of them. Now, you can't restrict him from where he buys service. The only thing you can say is government should not fund when he's taking his kids or himself abroad. He should fund that. But if it's happening here, then government can fund that. But for civil servants, then government should say completely, no. All your services should happen.
Including your wards going to school.
Should happen here. But now, we now have to now create, what's the divide? How do you divide between public and private schools in Nigeria?
Okay,
that's so that divide. How are you going to separate that?
All right. So Olumide, I remember when I was speaking to the analyst, he said there's this reason he told me why it can't work, is that the children of the politician that you are trying to say don't attend public school, not private school in Nigeria, is an individual. He has fundamental human rights to choose, and you cannot limit him. If he wants to use government facility, is his choice. You cannot limit him. If you want to use private facility, it's his choice. Because if you intend to limit them with the law, then you are gagging them and you are acting contrary to what obtains in the Constitution. He was a lawyer, so he was giving me that advice. Now, but when we look at it in terms of productivity and earning public confidence, so that the public services, the schools, the hospitals can be of the standard for which they should be, so that we do not have them run to other. What would be your
All right. I remember former Governor Nasir El-Rufai. He did that some time ago. He enrolled, I think, 1 or 2 of his children in a public school to also encourage other governors. I think the aim there is that if public servants, if they focus on these government schools, these local schools, they will actually see the need to revamp, to reconstruct, to rehabilitate these schools. I think that's the aim. That's where this bill is trying to, what this bill is trying to aim, is to put the searchlight on public schools, that how can we bring them up to par. If public officials are enrolling their children in these schools, they will be able, because yes, if I want the best for my child, let's say for instance, I enroll my child in a school that I feel is not up to par, I can either donate, I can either sponsor or support, because I want the best. Now, the Constitution also guarantees freedom of choice. So you saying that a public official cannot or should not pick the choice of his schools, you are going against the Constitution because he has the right. And like Chuk said, some of these politicians made their money before coming into government. So it's not, but if you now say that they should not use public funds in accessing education, medical services, then you are in line.
Okay, so as we round up, these politicians, they are politically exposed persons. The issue about Nasir Rufai taking his son to a public school expose him. If other politicians would do that to put their children in some of these schools, and safety and security-wise, what if they are the target of kidnappers?
Okay, now
because they know their parents have money, and if they are kidnapped, they are going to pay their. After all, their father is a commissioner, is the governor, is this, and they have become the target of those who carry out nefarious activities. As we round up,
can we see Nigeria as a safe place and not always having that fear that bad or evil will happen? The governor of Enugu State, I can still remember, his kids attend IMT, SouQ. It's a normal thing.
It wasn't the governor then. Wasn't the governor
even
then?
as a governor.
Even as a governor now?
Yes, it's a normal thing. Let's see these people as people, not gods, not demigods. And let's see criminals as criminals and not target this or target that. If you have nothing on you, or if you're really doing your job, you shouldn't be scared of who is after you. As long as you know that, yes, the government is making sure that security-wise, the state is secured. That should not be a fear.
Okay. In rounding up, Olumide.
Well, just like I said, it should be, the Constitution guarantees freedom of choice. I feel, it should be more of encouraging than enforcing, because you cannot say that one man should put his child in a public school because he is a public official. Public service is public service. It's you volunteering to serve the people, regardless of regardless of your ethnicity and all that. So he should not be his children should not be subjected to that. As a result of my dad volunteering to serve the people, I should be subjected, because the child also has his own choice to make. What if he wants to further his education abroad?
As long as the government is not paying.
Fine. Okay. That's where I stand.
All right. So as we round up today, the choice is yours. Do want to follow us on all our social media platforms, on all our conversations today. Your take is very, very important for effective feedback. I'm Oyin Priye Krumale, until will come your way. Again, next time, do stay good and have a splendid day ahead. And
yeah, remember, there is only one country, Nigeria, for those of us from this climb, and Africa is rising. Nothing is going to pull us down, so play your part. My name is Chooks, John Rogers Chooks. We'll do this again tomorrow. Have a nice day.
It's been a pleasure joining us on Souq Business Landscape. Don't forget to follow us on all our social media platforms at SouqNews TV. I am Olumide Shokoya. Enjoy the rest of the day.
Take Nigeria because it's the mind that needs to first of all be rebranded.
Idris said he's going to be putting Nigerian labor, Nigeria content and materials first.
If you say Nigeria first and it is just us down here that, are pushing that agenda, it's going to be a big struggle.
Do you think Nigerian firms, Nigerian organizations should start looking at getting their staff involved in this market or buying to keep for their staff? Within this side, let's also learn citizens. See something. This is SouQ Business Landscape.